when people call for crashes, it's such a tricky thing, right? Because crashes are mainly massive downs in a single day or maybe in a few days. I'm not necessarily seeing that at this point on the market, right? So remember that when you're coming off of all-time highs and just continual all-time highs like we've seen, there's always going to be buyers that are saying, okay, well, last year when it dipped 3%, it was a buy the dip. Here we are down 6%, so it's really got to be a great buying opportunity. And that gives the market a general bid every so often when it dips. Having said that, do I think it's going to meander down? Yes, I do. The Fed came out with ridiculous fiscal stimulus. The government came out with fiscal stimulus, and it caused the market to go in this almost vertical type move. Yeah, so there's definitely, history at least shows us that these invasions short term do have an impact. So, for instance, all along, last Friday it was like imminent, right? That's what everyone thought. It was Friday afternoon. I called BS on it because it was just too weird that on a Friday afternoon that news would come out. And I've been saying for the longest time that if Russia's going to invade Ukraine, they're not going to do it during the Olympics. China is very proper in that way, and Russia and China have a very good relationship. So it's more likely it'll happen right at the end or after the Olympics. So we are coming into that, post-Olympic period. I think this weekend the Olympics end. So there is a chance that it does happen. I'm still struggling with the positives for Putin. I mean, there's a lot of new sanctions that can come on. Potentially pushing Europe away from needing gas. Maybe they'll find other methods. And Russia relies on a lot of buying of gas and oil from the rest of the world. So again, I'm not sure if it's to me, it doesn't make a whole lot of sense. Doesn't mean Putin won't do it, right? We know that. But yeah, for me, I'm in a position where if we saw, let's say Monday, the markets are closed, but Tuesday, if the markets gap down because there was a big invasion, I would be a buyer for a quick bounce. And again, historically, you see panic initially, and then people are like, okay, well, the U.S. is insulated. The consumer in the U.S. is still spending, so it's not the end of the world for the U.S. And so I will make a list over the weekend of stocks that if they do gap down, I'll be looking to buy at least for a swing trade. Again, I still think overall markets will head lower over the next 8 months. So I'm not a long-term investor, but for a bounce off of panic like that, absolutely. Yeah. So, on a short-term basis, yes. So I'll just throw this one out here. Like Robinhood, right? I mean, I'm not a huge fan of Robinhood, but I can't deny that this is a bull flag, so on a shorter term basis, this pattern is bullish. So you might get a pop back to like 15 or $17 on this, as long as it doesn't take out this low of around $10. So, there's little shorter term patterns. There are other areas where I'm invested where I plan to hold for, let's say 6 or 12 months. And those would be in the names like, the outside the United States names. So like China's Alibaba, Baidu. I mean, today the U.S. stock market's getting pounded and Baidu's having a great day. It's up on the day about 1%, not a huge day, but still you can see while the U.S. markets are declining, you're starting to get this potential cup formation, right? So maybe we start to put in a cup and handle pattern here. Looking at the larger time frame here also, you can see that it's all the way down on Baidu from, Baidu was a $350 stock. It's now at $170. So a lot of these names are very good quality, good earnings quality. Alibaba, for instance, trading at like a 15 forward PE. Look at that drop already. So these are the names that I'm looking at. And one of the things I've taken note of is that institutional investors are very underweight global equities, right? All the money from the world has been focused on U.S. names because the Fed was so lenient and always bailing out the money. So all the money came in from all over the world. Well, now the Fed's not so friendly, right? They're starting to say, okay, we got to fight inflation, higher rates, lower balance sheet, et cetera. So you have to start saying, okay, if they're underweight, they at least need to get back to equal weight with global equities. And that alone can push up a lot of these stocks. Now, as I always say, China has risk, right? We know the potential restrictions and stuff. So you have to invest wisely with percentages of your portfolio. But I do think that's the place. I mean, this is the place where I'm in. I have this stock, I have Baidu, I have Tencent, TME, different ones like that, which I'm absolutely holding for a longer period. And the Fed, as they tighten, it tends to make people have more confidence in the dollar, right? So even though we have high inflation, the Fed's now saying, okay, well, we're going to tackle this inflation and fight it. And that makes confidence rise, which generally will mean dollars will flow into, or money will flow into the US dollar. The other side of it is also the fear side, right? So when you have instability on a global basis, people go to gold and they also go to the old trusty dollar. So that also is helpful in terms of getting money into the dollar and propping it up. Now, if you ask me where the dollar is 10 years from now or even 5 years, I think it's way, way lower. I think that inevitably the Fed will get caught in this scenario of, okay, well, we've tackled inflation. It's come down, but maybe not 2%. But now unemployment is soaring. So now we have to print more money and then inflation's going to soar. So they have to attack that. But they never get back to that kind of break even point. It's always more, more, more. And therefore, longer term, you have to think the dollar's in trouble. So again, would I invest, in that very short term basis on shorting dollar? No, not really, because you have to think that if Russia invades, Monday week or Tuesday we come in and the dollar could be up substantially. But if you ask me where it is 10 years from now, yeah, dollar should be a lot weaker. So I think that the Fed is now, we've kind of made our bed in terms of the Federal Reserve, in terms of their replication of the issues and then fixing the issue by causing another issue and so forth. And I do think that the end game is, especially with the U.S. debt, is that the only way to really tackle it is to devalue the currency and to print more and more money. So, if you look at Europe, if you look at other countries, yes, they're going to be on that path. But I think the U.S. at this point is going to see more and more kind of a movement away from the dollar, even as a reserve currency. I'm worried that you're now seeing the digital yuan being launched. I think China really has this global plan of that being the future of the reserve currency. So they're going to try to supplant the US dollar, which if that starts to happen, then you have all these countries starting to dump dollars on the open market, which will also drive the value of the dollar down. So, the main reason the dollar stays as strong as it is because it's the reserve currency. Start keeping a very close eye over the next couple of years if that starts to weaken. If other countries like China start to push the digital yuan to be that reserve currency, then the dollar is in a lot of trouble. And by the way, that's really good for gold in terms of US dollars, right? I think overall, at least for the next few years, probably next 2 to 4 years, gold is going to play catch up. You could argue that gold, considering the amount of money that's been printed globally and domestically, gold has really lagged in terms of its price, right? So, we've seen real estate go nuts. I argue that we're in a bubble in real estate right now. Stock prices with crypto prices have been in a bubble. We're starting to see that deflate. And I think a lot of that money is going to start to rotate into things that have lagged, which one of them is gold and other metals as well, even silver to some extent, which, yes, short term, like I mentioned, silver might have a little bit of downside, but I think a lot of upside in silver as well and metals overall. Everyone wants to know about Bitcoin and why it kind of is declining or has declined so much, even with gold starting to break out. I would just mention that in the short term, Bitcoin is treated like a tech stock, because anytime you have 80% declines from peak to trough during bear markets on any asset, it's going to be treated as a risk asset. If you ask me where 5 or 10 years from now Bitcoin is, I think it trades a lot closer to how gold will trade. It just has to mature into that. So again, I think longer term Bitcoin, golden opportunity there, but I think it goes lower first with the overall market, with de-risking, with deleveraging in the system. And I think gold is the safest place, maybe not the best return, but the safest place to be during this next patch.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.